Because I'm currently recording my meeting. All right. So those who couldn't join would have to watch the recording. All right. Would have to watch the recording. So let's start. Let's start. All right. So I want to welcome you guys once again to this trading session. It's going to be introduction to forex trading. All right. So basically, we'll be talking about the basics of forex trading. Basics of forex trading. All right. So I will tell you guys what forex trading is all about, and then introduce you from the scratch to what we're talking about forex. All right. So this video will be uploaded on my YouTube channel. So this is your first time of being on my YouTube and what's coming across my video, please do well to like and share and also comment so this video can reach out to more persons who need them. All right. So let's go. So talking about forex trading, all right. So we need some ingredients to become a successful forex trader. Okay. The first one we have here is proving strategy. All right. To become a successful forex trader, you need to have a proven strategy. A strategy you must have tested over time, back tested and forward tested, all right, so as to become really successful as a trader. Then you need to also have something we call risk management, all right, proper risk management, okay. So without risk management, you would lose all your money in the of an eye, and then you could blow your account. What we call blow account in forex trading is whereby you trade all the money in your account and then you lose everything. That's what men will say, blow your account. All right. You also need to have balanced emotion. All right. A very balanced emotion, because psychology of forex is very important. Psychology needs to be top notch when trading. Then you also need to have the market knowledge. All right. The knowledge of the market. Then you also need to have mentorship, like what we are having right now. Someone to hold you through, to teach you the process of trading. All right. So these are mentorship. Then you also need to do consistent practice on your own. All right. In forex trading, you never stop learning. Okay. You always trade. You always practice consistently every day. You keep on improving yourself. All right. You keep on improving yourself as you go. Please hold on. You keep on improving yourself as you are going by the day. All right. So that's what we mean by consistent practice in forex trading. Stay with me, guys. I'm with you together on this call. So our next topic will be what is forex trading. All right, what is forex trading? What is forex trading? All right, so forex trading, according to this definition we have here, it is also known as for FX or foreign exchange market, refers to the global marketplace where banks, institutions, and individuals speculate on the exchange rate between fiat currency. All right, the forex market is the largest financial market in the world. Forex market is the largest financial market in the world. All right. Now, if you think one currency will be stronger than the other currency, and you end up correct, then you can make money in forex. You can become profitable. All right. Now, it's just a speculation about it. That I want to buy this currency and sell this other currency. Thereby, you're making money. For you see the exchange of currency, exchange of money. All right. So remember, you are exchanging one currency for the other. All right. You are exchanging, for instance, you are exchanging dollar and the euro. You are using dollars to buy euro. or you're using euro to buy dollar. So that's the simple term for forex trading. All right. So if you travel to another country, for instance, and then you find a currency booth, exchange your currency, like for that country's currency. All right. What you just did is forex trading. For instance, you are in Nigeria, probably you want to travel to the US. All right. What you're going to do is this: you will need to change your naira to dollar so that when you get to the US, you can spend your money. Because now you can't go to the US and spend naira. You need to spend dollar. So what you are doing, you are using your naira to buy dollar, and then when you get over there, you now sell the dollar. So that's forex trading, exchange of currency. All right. So I wish you together on this call, please. I can't see the chat at the moment. Can someone mute and just speak? Let me know if we're together and you can hear me properly.
Yeah, we are hearing you. Yeah, we are hearing you.
All right. Thank you so much. Thank you so much for that. From time to time, I'll be reaching out to you guys to speak up so that I will know we are still together on this call. All right. So, like as I was explaining, for instance, you change your naira to dollar, and then let's say you use 1 million naira because we are in Nigeria. I'm using naira as an example because we live in Nigeria. All right. So you have 1 million naira, and then you change it to dollar. Let's say at the time you do that, dollar was 700. So 1 million naira would also buy like okay, let me say dollar is 1,000. All right, for easy explanation. So 1 million naira would also buy $1,000. Let's say dollar to naira is 1,000 naira, 1,000 naira to $1, and then your 1 million naira will go to buy $1,000. All right, and then you traveled down to the US. You have your dollar, your $1,000. Then you travel down to the US, and then you are returning back to Nigeria. You need to convert your dollar to naira, and then on getting to the airport, you realize that dollar is now 1,500 naira to $1. All right, and then you decide to convert your dollar back to naira, and then you get 1.5 million naira because by so doing you've now made the profit. You've now made a profit, all right? Because now the price increased from when you bought it. So that's the simple term of forex trading. All right, you're aiming to buy when the price is low, and you're aiming to sell when the price is very high. All right. So that's all right. So basically, that's the concept of forex trading. All right. So an exchange rate is the relative price of two currencies from two different countries. All right. So that's an exchange rate. That's the relative price between the two of them, just like I explained just now. Hereby the exchange rate of dollars to naira was 1,000 just now, and the other time it was now 1,500 now. So that's the exchange rate. Now, let's move ahead. Now, how does the forex market work? Or how does forex trading work? Now, the forex trader, you are speculating on whether a currency will rise or fall in price against another currency. So forex trading can be defined as the process of speculating on currency prices to try to make a profit. All right. At the end of the day, all we are doing is we are just speculating to be able to make a profit. We're speculating to make profit from the market. All right. So what we're just doing now, we are speculating that the price will go up now, or the price is going to come down. That's all we want, to make money. And if you are right, you make money. If the price actually goes up like you have speculated, you make money. And then the price also goes down as you have speculated, you make money. All right. The value of a currency is influenced by economic, political, and geographical events, and trade and financial flows. All right. So these are the things that affect the movement of price in the market: economic influence, political influence, geographical influence, and trade and financial flows. All right. So if if a country's economy is not doing well, you see that the value of that country's currency starts going down, just like the dollar against the naira. So probably because our Nigeria economy is not doing well, you see that the naira keeps on depreciating in value. All right, so that's economic value, economic influence on the price of a currency. All right, and also political. If for instance the government can just come up and just make a speech, government of US can just come and make a speech, and then you see the price of dollar will either go down or go up depending on what the president of that country is saying at that time, or someone or of political influence in that country making a speech. Depending on what you say, if it's positive or negative, it will affect the price of that currency. All right. So let's move ahead. So the value of the currency is influenced by, okay, I've said that. So placing the trade in foreign exchange market is very simple. The mechanics of the trade are very similar to those found in other financial markets. All right. So placing the trade is very simple. You just need to buy and you need to sell to make profit. So forex trading is a decentralized market where the world currency changes hands. It's a decentralized market. All right, it's not centralized. A decentralized market whereby it cannot be controlled by one person, although we have big parties in the market. So exchange rate also changed by the second, changes very quickly. So the market is constantly in flux. So because the exchange rate of each of currency changes per second, it means that the market is constantly in flux. The market is volatile. The market is always moving. The market cannot stop. So because all these things I listed to you, which is those things influencing the price movement of the market is always moving, or price is always moving. All right. So the forex market does a volume of $6.6 trillion daily. Like we said earlier, it's the largest financial market in the world because it's bigger than the New York Stock Exchange market. It's bigger than any financial market you can think of. All right. So it does a volume of $6.6 trillion a day. All right. Are we together? 6.6 trillion is the amount of money that goes into the forex market on daily basis. All right. So forex market is open 24 hours a day and 5 days of the week. 24 hours a day and 5 days of the week. So the forex market does not close. It's always open. So that's why it's a very good market, and it currently moves every time, every day, except weekends. The foreign market is not open on weekends. We trade from Monday to Friday, and then Saturday and Sunday, the market goes up. All right. Now, what do we trade in the forex market? What do we trade? We trade basically currency. As you can see on my slide here, it says asset classes. All right, asset classes means that these assets are the things we trade on the forex market. Now we trade FX currency, we trade shares, we trade indices, we trade commodities, we trade energy, and we trade cryptocurrency in the forex market. So you can see that the forex market is very, very large. All right. So these are the things that are being traded in the forex market. Now, we basically trade money, which is also currency. Now, let me give you an example or an analogy, all right? So because you're not buying anything physical from the market, all right, forex trading can now be defined like this. Okay, let me use an example since you're not buying physical, all right. So what you're basically buying is the country share, all right. So let's say you are buying a share of a particular country. Okay. Now let's say you feel that um the you feel like Great Britain is going to do well. You just feel like the economy is going to appreciate in value anytime soon. So what then you now do? You buy pounds, all right? So you buy a share of that country of Great Britain, which is now Great Britain's pound. So you are now buying a share. Since you are not buying the physical pounds as it's here, now you are trading the forex. You are buying the share of Great Britain, and then you are speculating and saying that the economy of Great Britain will do well right now and also even do better in the future. Like if that happens, you've made money. You've just made money because your share will not appreciate in value, and then you cannot sell off your shares, and then you make your money. So all this explanation is just to tell you how the forex market works, correct? How the forex market operates. It's just basically we speculating to buy and also sell. So it's quite easy to understand. All right. So we have some pairs here that have been created in the forex market. We have major pairs and we have minor pairs. All right. Please tell me, let me move on in the slide. All right. We have major pairs and minor pairs. Now, what are major pairs? What are major pairs? What are major pairs? So major pairs can be described as those pairs that are mostly traded in the market. Pairs that are mostly traded in the market. All right. So as you can see on my screen here, these are the major pairs we have. Right, USD, USDPY, GBP, USD futures, USD CAD, AED USD, and NZD USD. All right, so these are major pairs. Now, when we are saying Euro USD, this EUR simply means, as you can see here, this is the code of how we call it in the forex market. We don't just say we want to buy United States dollar. It is being abbreviated like this USD, meaning that the US there is the country's name, and then the last D there is the currency of that country. All right. So the first two letters represent the country of the currency, and then the last letter now represents the currency the country uses. All right. It's always three letters. So the first one there is USD, means the United States dollar. And the second one, EUR, means Eurozone or Euro. All right. The countries there, Eurozone, what they use is Euro. All right. So JPY is Japanese yen. GBP is Great Britain pound. All right. Then CHF is Swiss franc. All right. Then CAD is Canadian dollar. AUD, Australian dollar. NZD is New Zealand dollar. So when we measure things like this, as time goes on, you can always ask questions. When we use this term, then you'll be able to understand that what we mean is, when we say USD, we mean the dollar. When we say JPY, we mean Japanese yen. When we say CHF, we mean Swiss franc, CAD, Canadian dollar, and so on and so forth. All right. So we talk about the major pairs. Then we also have minor pairs, which have been trading in the market. So basically, major pairs are pairs that are paired with US dollar. All right. Some persons can define it like that, pairs that are paired with US dollar. Any pair you see that paired with US dollar, because you can't trade a single pair in the market. You must trade a pair with this another. Or let's say you must trade a currency against another currency. For instance, you say, okay, like I said before, you are buying naira to sell dollar, all right, to make profit. So for example, you are speculating that the euro will be stronger than the dollar. And now in the example we have here, it's written as euro slash USD. All right. So what you are saying, what you're going to do is you're going to be buying euro to sell the dollar. All right. So you're going to be buying euro, speculating that euro is going to be more powerful or stronger than the US dollar. What are you going to do? You are going to buy the euro and sell the dollar. So that's what the market does for you basically. It's very easy and very straightforward. All right. So minor pairs are other pairs. All right, they are not paired with the US dollar, and they are not so traded. They have less volume than the major pairs. The major pairs are more volatile and they move faster in the market because they are often traded by most traders in the market. All right. So these are also minor pairs here. These are also minor pairs, the pound cross, the Japanese yen cross, and all that. All right. So we also have exotic pairs, but we won't be touching on that right now. So we have something called Forex code. All right. Forex code. Now, if you can see on my screen there, you can see euro slash USD. All right. Now, the euro there can be said to be the base currency. The base currency. And then the USD is the quote currency. Now, whenever someone says buy euro USD, what the person is telling you is this, that euro is going to be stronger than the dollar at that moment or in the future. So what are you doing? You are going to be buying the USD, you are going to be buying the euro against the dollar, all right? Now, the base currency is what you must focus on when trading. The base currency is what you are buying as against the other currency, all right, in Forex. Or, for instance, when somebody tells you to buy dollar now, buy dollar against the Japanese yen, what you're going to look for on your MT4 at that time, you're going to look for USD slash JPY. If a person is telling you to buy dollar, all right? Once you buy dollar, you look for the base currency. The base currency is always the first currency you are seeing there, and then the quote currency is the next currency. So in this illustration here, for example, your MT4 can display euro USD equal to 1.324550. What this means is this. It means that 1 euro is equal to 1.32450 US dollar. It means that you need 1.32450 US dollar to be able to own 1 euro. All right. So that's just an kind of foreign code. All right. So in foreign, we also have something like called bid and ask price. All right. Bid and ask price. All right. So bid price is the selling price and ask price is the buying price. All right. So now the difference between the bid and ask price is what we call spread. So if you go to the bank, for instance, and then you see the rate board which is being displayed in the bank there, and then you see different currencies. You see dollar, you see euro, you see Japanese yen, you see different currencies will be listed on the bank rate board, and then you see we buy at this amount and we sell at this amount. You always notice a difference in the amount that they are willing to buy and the amount the bank is willing to sell. There's always a difference. Even in the black market, if you go to the change office to change your dollar to naira, the amount they are buying the dollar and the amount they are selling the dollar is always different. It's always different. Some of them can be different with like 5 naira, or some will be different with about, let's say, 10 naira. Now that difference there is what we call spread. The difference in between is what we call spread. Now this is where brokers make money from. We'll talk about brokers. We'll talk about brokers, all right? Someone will talk about brokers. So that spread is where brokers make their money from. And are we together? Can we speak up? Let me know. We have to together on this call.
Yeah, we are together.
All right. I hope we are getting value. I hope I'm not too fast. I hope we are getting it and we are taking it. All right. Do you understand what we mean by spread? Do you understand what we mean by spread? Do you understand spread? Hello? Hello?
Sure, we can.
Can you guys hear me? Can you guys hear me?
Yes, we can.
Yes, we can.
All right. Let me share my screen again. Let me share my screen. This class is not supposed to last so long, just so we can get a basic understanding of what forex trading is all about. All right. So let's move on. And there's something we call PIP in forex trading. PIP, P-I-P. PIP means percentage in points. Percentage in points. Now, in the layman definition, PIP is the movement the price makes in the market. All right. So price moves in points. Price moves in points. So the percentage of that point is what we call PIP. All right. So you hear people saying something like, "Oh, I made 20 pips in this trade. I made 30 pips in this trade." So that pip is the point, the percentage of the point that the price moves from point A to point B. All right. So that movement of price is calculated in pips, and then you can say, okay, you made 10 pips or you make 20 pips for that trade. All right. So 1% of 1% of price. Now, for example, you can see the example here. So USD price is 1.34510. Now, 1% of that price is 0.01. 1% of 0.01 is equal to 0.0001. All right. So if Euro USD move by 0.0001 from the current price of entry to this other price we are seeing here, which is price move from 1.34 to 1.34510 to 1.34520. It means that you have made just one piece. All right, made one piece. No, with time, if we go to live illustration of the MT4 and how price looks like, you would understand movement of piece and the point. All right. So price moves in points, and then if it moves in 10 points, you can say, okay, you have just made one piece. So the layman understanding 10 points is equal to one piece. So 20 points movement of the price is not equal to 2 pips. So to get 20 pips, price needs to move in 200 points for you to get 20 pips. All right. So let's move on. Now, this part here is more technical, because here we'll be talking about strict profit, we'll be talking about entry, and we'll be talking about stop loss here. All right, so I will explain all these things. I will explain all these things. Now, if you enter a trade, in the forex market, now the point where you enter that trade is called your entry. The point where you enter the trade is called the entry. And then we have something called stop loss. Now, what is stop loss? Stop loss is a point where you tell the market, okay, since I'm entering this trade at this point, I'm speculating that this currency is going to buy or is going to rise up against the other currency. All right. Now you are telling the market that this will, if eventually price comes back against me, I'm not in my favor this time, price begins to fall down. If price gets to this point, please close my trade for me. I don't want to lose more money than this. All right. Now I'm speculating price is going to go up. But if eventually price doesn't go up, what do you do for me? Please close my trade at this point. That's what we mean by stop loss. Now, there's something also called take profit. All right. Now, what you're saying in the market is this. I'm speculating that the market is going to rise up. Now, if eventually price rises up to this level, price goes up to this certain level, please close my trade and give me that profit. All right, close my trade and give me that profit. So if you can see on the illustration here, you can see buy. You can see buy entry. Okay, buy entry was 1.34510, and then your stop loss is now 1.34410. So that stop loss now is 10 pips. Because if, as you can see on the two prices there, you can see that the difference between 1.34510 and 1.34410 is how many points? Is 100 points. All right. So that 100 point there now gives us 10 pips. Then the take profit, you can see the figure of the take profit there is 1.34710. What does that mean? What does that mean? It means that price will go in your favor for 200 points, and that gives you 20 pips profit. All right. All right. Also, in the sell side, okay, if for instance someone tells you, okay, enter a trade now for buy, and then enter this trade for stop loss 10 pips and take profit 20 pips. Please write this down. Please write this down. Write this down. When you are buying a trade, and someone gives you the stop loss, you subtract to get your stop loss. When buying, you subtract to get your stop loss, and you add to get your take profit. Are you writing this down? When buying, you subtract to get your stop loss, and then you add to get your take profit. So, for instance, our entry price is 1.34510, and then please hold on. Are we still together, guys? Are we together, guys?
Sure.
Okay. So, like I said, if someone tells you, okay, I'm giving you a trade now. On this trade, You are going to be buying euro against the dollar. But when buying, your stop loss is 10 pips and your take profit is 20 pips. Now, what that means is this. It means that you are going to be subtracting 100 points from the current price. You'll be subtracting 100 points from the current price to get the exact amount to place your stop loss, all right, on that particular trade. And then when you see 20 pips for your take profit, it means that you are adding 200 points to get the exact amount to place your take profit. Then when you are selling, now write this down also, when you are selling, you subtract to get your take profit, and then you add to get your stop loss. When selling, you subtract to get your take profit, and then you add to get your stop loss. All right. I believe that is clear. Now we also have something called lot size in trading. Lot size. All right. So lot size is the volume of your capital you are willing to put out on that trade. You are willing to risk on that trade. All right. So we have different kind of lots. We have standard lot size. We have micro lot. We have mini lot. All right. Standard lot size is one lot. All right. Then we have 0.1 lot, 0.01 lot. Then we have 10 lots. There are different kinds of lot size. Now, on different currency pairs, this lot size can mean different things. So as you can see there on the first volume there, which is 0.01 lot. If you are using 0.01 lot on a particular pair, it means that if the price moves in 1 point, or let's say, okay, per pip, you either be in profit or loss of $0.1. Now we're trading in dollars in this situation. It means that you be in profit or loss of $0.1. All right. If price moves up again by say 2 pips in your favor, you will make $0.02. All right. So these are the different lot sizes we have here that we can use to trade the forex market. All right, we don't need this. With time we'll dive into that. Now, do we have any questions so far? Do you have any questions so far? Any questions, guys? Hello, guys. Are we together?
Oh, yeah. If you have questions, guys, unmute yourself and ask.
Hello. Can you hear me?
Yeah, I can hear you.
Okay, concerning the lot size.
Okay.
Is it advisable to trade higher lot size or lower lot size? The smallest or the highest?
Okay, so for lot sizing, it is dependent on the amount you are using to trade. All right. For somebody who has $100 account, $100 account, and someone that has $100,000 account, both of you will not expect to use the same lot size. If you have little amount, you use little lot size to trade. And if you have large amount, you use a high lot size to trade. Now, this is how lot size work, correct? So if you are using a small lot size to place a trade, it means that if the trade is going in your favor, you start making little money gradually. But when you are using 0.01 lot size, if the price moves in your favor, you start seeing $0.01 or let's say $0.1, 0.01, just like that. It moves little by little in your favor. All right. But if you are using big lot size, for example, now you decide to say, let me use big lot size out of greed. Let me use a lot size of let me use one lot size, and what you have in your account is just $100, and price goes against you at that point in time. It means that you start seeing -$1, -$2, -$3. Before you know it, price will just move like, let's say 20p, just 20p, and you have, or let's say 10p, you have lost the whole $100 you have in your account. And because you don't have enough capital to withstand that lot size. So it's advisable to use lower lot size. The lower the lot size you are using, the lower the amount you are risking to the market. The higher the lot size, the higher the amount you are risking to the market. All right, is that clear?
Yes, it's clear now. It's clear. Thank you.
All right. Please, any other question before we continue? Any other question?
Can you hear me?
Yeah, I can hear you, sir. Go ahead, please.
Does the lot size also determine the take profit, something like that, like the amount of profit you make during the trade?
Okay. Yes. Yes, the lot size determines the amount of profit you make, and also determines the amount you are losing. All right. So it's both ways. It's both ways.
Okay.
You are using big lot size, and price is going in your favor, you're making more money. But if you are using smaller lot size, the price is going in your favor, you'll be making little money as price goes. All right. So it's both ways. When you are losing and when you are winning, you'll be making either little amount or large amount, depending on the lot size you are using. Don't worry about our next class will be teaching you on how to use the MT4 platform. How to use the MT4 platform. Here we show you where you input the lot size, where you input the take profit, and where you input your stop loss, and all the technical know-how about MetaTrader 4. Okay, so MT4 is where we place trade as retail traders. All right, so we are retail traders. All right, MT4 is where we place trade. Okay, I forgot to mention the major players in the Forex market. All right, so we are like third in the chain. They're like the third person in the chain. We have the bank. All right, we have bank, which is the central bank, commercial bank. These are the major players. All right, major banks. These are the major players in the Forex market. These are the guys that move the market. So we are called retail traders. We are called retail traders. We are just a small fraction of people who exist in the Forex market. All right, and just a small fraction. The whole 6.6 trillion that goes in and out of the Forex market. We are just a small fraction. Everybody you see calling themselves Forex trader, Forex trader, Forex trader. Our influence in the market is very, very small. So when I say retail traders, I'm referring to people like me and you, all right, who trade in the market. So as retail traders, our money is very small compared to what we have in the market. So as retail traders, what we use to place our trade is called MT4. They also have some other platform in other countries where they already use to trade. But the most popular platform for trading the forex market is MT4 and then MT5, as you see, right? So these are the applications we use to trade. You can go on your app store and download the app. It's called MT4 and MT5. iPhone users may not see on their store currently, but Android users, you can see the app on your store to download. So for iPhone users, you could look for someone who has the app on his or her phone, and then you log in the person's what's it called, iCloud on your own phone. You're able to download it on your phone. But for now, you can't get first download because it's a Russian application and all that. So basically, just one of these things. So it was removed from the Apple Store. All right. So you can download it on your phone or on your computer before our next session. All right. Any other questions? Any other questions?
Sorry, can you hear me?
Yeah, I can hear you.
I really didn't get the app names. The names for those
Okay.
app, I didn't get.
Okay, MetaTrader 4, MetaTrader 4 or MetaTrader 5. Let me write it on the chat box.
Okay, thanks. I'll wait. That's all.
Okay, I just dropped the name. I just dropped the name there, so you can download those two apps or one of them. Yeah, so that's where you find all the currency pairs and all that. Okay, so let me talk about forex brokers. All right, brokers. Now, who are forex brokers? Now, since we are retail traders, as retail traders, we really don't have enough money to go into the market to execute trade. All right, we really don't have enough money to go into the market to execute trade because our money is very little. For instance, to buy one lot, you need to spend like $100,000 to buy one lot of, let's say, dollar against the euro. So you spend that much money. So now, what do we do as traders? We leverage on brokers. Now, brokers are big players in the forex market, all right? Brokers are big players. After the banks who are major players in the forex market, you see brokers, their nets and all that, the hedge funds, so on and so forth. You can do research on this on your own later. All right, so these are the guys that are major players in the market. Now, what does the broker do for us? The broker stands as a third party for retail traders, all right, for retail traders in the market. So now, the broker, we pay our money to the broker, and then the broker gives us leverage, all right? It gives us leverage for us to be able to use our little money to not trade on the financial market, all right? So the broker mirrors our trade. Anything we place here, the broker goes to the market and place that trade for us with their own funds, all right? They are giving us borrowed funds. All right? So they place that trade with their own funds for you there. So now when the trade goes against you or for you, the broker takes your own money here because the broker on their own, they are doing their own trade, all right, in the real financial market. Now we can't go to the market and place our own trade on our own. So we leverage on brokers, all right? So these are what brokers do. All right, so let me see what I have here. That's retail traders, you and me, at the bottom of the chart, like I said earlier. We are at the bottom of the pyramid of people who have influence in the financial market, all right? So retail traders don't have direct access to the market since they are not financial institutions and have just 20% contribution to the market, where retail traders have to leverage on a broker, like I said earlier, in order to take part of the large financial market. Now, brokers, who are brokers? Now, brokers are financial firms that stand as third party between a retail trader, which is me and you, and the forex market. They provide the platform for retail traders to trade the forex market. All right, they execute trade order, buy or sell for retail traders at the trader's command. Do you understand what broker is right now? Do you understand what broker is? So broker sounds like a bank for us. They go on our behalf to place the trade. All they will do is just give us a backend, a platform. Here we'll place the trade. So if you have a winning trade, it is the broker that pays you. It is the broker that pays you, because the broker, they will go on their own to place your trade in the financial market for you. And then they make when it's profitable, they make their own profit from that particular trade also. And then they pay you the profit that you got it from that trade, which is by your own profit. They pay you the profit and they charge you a commission. They charge you a commission on that trade. And they also charge you swap, the spread and all that. They collect a lot of charges on a particular trade that you make using their platform. So these are how the brokers make money from your trade. All right. Before I go further, do we understand the definition of broker?
Yes, I understand the definition of brokers.
Okay. So we have several brokers available in the whole world. Man, brokers are so many. Like, should I say millions? Should I say millions? Mr. Maker, you're on this call, right? Mr. Maker, you're on this call, right? All right. Should I say millions? There are a lot.
I can hear you.
Okay, sir. Should I say brokers are in millions all over the world, or thousands?
There are very many. Just like we have banks.
Yeah. Like you said, just like we have banks, we have a lot of banks all over the world. All right. So brokers, they are also available. A lot of brokers you can choose from. You can say, okay, I want to partner with this broker and work with them. Okay, let me give you a popular example, like from adverts we've been seeing on, let's say, Instagram and all that. You see all these Instagram celebrities, they are promoting one broker called Octa FS. I mean, if you have heard of Octa FS, if you watch those comedy skit guys, you would have seen or heard them promoting Octa FS. All right, so Octa FS is a broker, right? So what brokers do is they do their own adverts, just like banks. They do their adverts for people to come and register with them and use their platform to be trading, use their platform to enter trading and trade. So brokers make money from what trading. If brokers don't get people who trade, who use their platform to trade, they wouldn't make money. So there are a lot of brokers, and all these brokers can be linked on the MT4 application or the MT5 application, depending on the one your broker supports. Okay, so that's on broker. That's on broker, because someone actually asked me this question about broker when we met live. So that's why I'm giving this in-depth explanation about the broker stuff. All right. Okay, this slide is also talking about how does the forex work. Okay, so these are your skills. Like, as a retail trader looking for to make profits in the FX market, you must learn how to analyze currency pair. By doing this, you are actually analyzing the economy of each country to which those currency pairs belong to. All right. For example, assuming you are considering United Kingdom and United States economy, you will select currency pair representing those two countries. All right. Now, the currency pair representing the United Kingdom is GBP, which is Great Britain pound. All right. And the currency pair representing United States is dollar, which is United States dollar, which is USD. All right. In this example, you see, if according to your analysis, the London economy hopes to be much better and stronger than that of the United States nearest future, automatically the GBP will increase in value than the US dollar. All right. So one can decide to place an order to buy the GBP against the USD. Now, if the reverse is the case, then one can decide to sell GBP and simultaneously buy dollar. All right. Note the base currency is the deciding factor whether you are buying or selling. Like I explained earlier, the base currency is always the defining factor here. All right. Now, the base currency is the first currency on the pair. The first currency on the pair. In this example, the first currency on the pair here is GBP, which is the United Kingdom pound. All right. GBP and Great Britain pound. All right. So if you are saying the economy of United Kingdom is going to do well over the economy of United States, it means that you are saying, okay, you want to buy, you are buying the GBP plus USD. Now it means that you are buying the British economy against the dollar economy. Like you are sticking your neck out to see that the United Kingdom economy is going to do well than the United States economy right now. As I'm speaking with you, between now and going to do well. So that's speculation. You buy it or analysis as the case may be. You are analyzing the market, I'm buying this one. Or if you now feel that the United States economy is going to do well more than the United Kingdom economy, what you will now do is this. You now do the reverse. You will now sell the GBP against the dollar because you feel that the United Kingdom economy will not do well. Then you will sell the GBP. All right. Now, there's another term here I want us to understand, which is the bull and the bear. When we hear people say the bulls are in control of the market, the bears are in control of the market. All right. So, bull and bear, they are both animals. All right. Bull, we all know bull, right? So, bull is used to represent the market when the market is going up. A rising market, For instance, the GBP against the dollar is rising up, is going up, is moving up. Like we can see it on the chart that's currently going up. What we say is that the bulls are in control. Bulls can also represent buyers. All right, they say there's an analogy that says that if a bull wants to kill its prey, he uses his horn to pick the prey up, pushes it up. All right, that's how the bull attack someone or kills his prey, all right, use on and take the person off. So bull is now used to define a bullish market. Hope I'm taking notes. It can also be called a bullish market. When there's a bullish market, it means that it's a rising market. The bulls are the buyer. When the market is currently buying, they will not say, the market is in a bullish trend, all right. Then we also have the bear. Bears. We all know bears, all right. They say if bear want to kill its prey, he puts it on the floor and uses his finger to trap on it and then kill the prey from there, all right. So that's why the bear is used to define a falling market. When you say it's a bearish market, it means that the price is currently falling. Right, the price is currently going down. I say the bears are in control of the market, right? All right, like if you read it, you say the bears, which is the seller. This refers to market participants who tend to drop or sell a huge amount of the base currency in a currency pair for the quote currency, thereby causing the base currency to depreciate in value. When this happens, we say the bears or the sellers are in control of the market. So that's basically the explanation for bulls and bears. So I believe I've been able to touch some terms that I will send to the group also for us to read through and understand basic terms of Forex market. All right. So any other question? Our class today is we spent a lot of time on this session. We're not going to take this long since we're just introducing Forex training to us. Because most part of the group we are we are really new to forex trading, all right? So this class is just on introduction. Our next class will be on proper market analysis, or we'll teach you guys on how to use the MT4 platform or the MT5 platform. All right, let me take questions. Let me take questions. Please unmute and ask questions if you have more questions to ask. Please, guys, let's pick up. Please, let's pick up. Hello, can you guys hear me?
Yes, 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 you can.
Yes, we can.
Okay. Okay, any question?
Can you hear me?
Okay. Yeah, I can hear you. I can hear you.
Okay. Are you the one that would suggest the broker we use when we start trading with the MT4, MT5 platform?
Yes, I will. I will suggest a broker for you to use. I will suggest some brokers for you guys to use. So just sign up,
Okay.
register. When you register on the broker, you create demo account. I'll guide you guys on how to do that on our session. I'll guide you guys on how to register, get a demo account, and start practicing the MP4 as it goes on. All right.
Okay.
So,
All right.
all right. Thank you very much. Thank you very much for that. I would like to ask, okay, what are your experiences with forex trading? Like, what impression do you guys have with forex trading? Let me hear from Blue, Mr. Blue. Let me hear from Mr. Blue. What do you think about forex trading? Like, what's your impression? How do you see forex?
Can you hear me?
Yeah, I can hear you very well. Yeah.
The forest trading, you mean from what you've taught or what I know before? Or
What you know before? What you know
okay.
before?
Basically, my idea about forex trading is just you buy a certain. I wasn't sure, so I just feel like you buy and you sell when it's high, you buy when it's low, and then sell when it's high, stuff like that. That's just it. My idea about it.
Oh, okay. Thank you so much. Thank you so much. Tama. Let me hear from Tama. What was the idea about forex trading? Like, how do you see forex?
Well,